Welcome everybody. Let's talk about the stock market. I'm also going to cover a couple other symbols that I think you're really going to enjoy, so stick with me in this video. We're looking at the weekly chart here for the S&P 500. These are the futures, the June contracts. These are the most current contracts that are being traded right now. This is a very excellent representation of what's happening in the stock market, right? So remember, we're looking at a weekly chart. So why am I looking at this chart? Well, let's look down here. Geddes indicator. This is an algorithm or mathematical equation that I have that picks out symbols on a daily basis to, more or less suggest to us that there could be some big moves in this symbol. And in this case, this algorithm here, this Geddes indicator algorithm, picked out the S&P 500 recently on the weekly chart. So when did it happen? Let's see if I can get this to play nice. Got some weird stuff going on here. Okay, there we go. Right here, the week of March 6th. Okay, we got this indication that there was going to be a big move in the market. Now, right now, on the weekly chart here, the suggestion is that the market's going to go down. We can see here that this is the whole moving average is pointing down. And we can see the MACD is trying to roll over. Now, it hasn't yet. Now, you're going to pay attention to these numbers right here. They're just above this zero line, this purple line. So that means that just for the moment, on a weekly basis, the S&P 500 is barely in positive, what we call positive momentum territory. Okay, but recently, the stochastic momentum index has been pointing down. I have one of my own indicators here called the Big Daddy forecast, which forecasts the market. It's kind of saying the market may have a little bounce there, but we're just going to ignore this indicator for the moment. All right, so what do we do with this? How do we interpret this? Let's go back and look at this one real quick. That was way back on the week of April 25th. And it was telling us that there was likely going to be a big move in the market. That's what the Geddes algorithm, in this case it's being displayed as an indicator, that's what it was telling us. There was going to be a big move in the market. Well, was there? There sure was. Yeah. I mean, look at that. For the next 3 weeks was straight down. So you have a lot of choices back then. You could have traded options against the SPY, the spider. You could trade options against the futures, these futures here, which back then obviously would have been a different contract month. Yeah. You could just trade the futures straight up to the short side. That's what I do. You could trade ETFs. Let's say you have a cash account. Let's say you're the type of person that just has a cash account only. You don't have margin. So you can't really trade options. You can't trade futures. What do? Well, you could trade one of the inverse ETFs or bear ETFs. So they would have been doing the opposite during this time. They'd be going up. So if you have this information here that's useful, that tells you that there's going to be a big move, and in this case it was kind of obvious that the market was going to go down because the MACD was already pointing down, and so was the SMI pointing down. So this trade here was pretty easy for a swing trader. Just be a swing trade, right? Not a day trade or an intraday trade. No, this be a swing trade. You do it for over a period of like a few weeks and make big money. Okay, so let's fast forward to today. Here we are. It's telling us there's going to be a big move in the market. Well, at the moment, it looks like it's going to be down. But we don't just want to jump in, up to our necks in deep water, don't know whether or not the current's strong, and we drowned, right? You could be a little patient here and wait for the MACD to tell you what it's going to do. Does it cross over the next week or two? If it does, then you can start making that trade to the downside. You can see I've got some support here, some resistance way up here at 4327. Okay. So 3901, we already broke through that support the last couple weeks. And it got down halfway between 3901 and 3788. That would be the next support right here. Now let's talk about these blue blue arcs. These are cycles. For those that are not familiar with cycle analysis, basically it forecasts the future. Look over here. There's no candlesticks over here, right? There's no candlesticks over here, right? But these cycles are forecasting that the market will come down. How far down? I don't know. We're not going to get into that yet. And over here, the same thing, that the market's going to come down. So just keep that in mind. That's what these cycles are doing. These arcs are just cycles telling us, anticipating the market is going to have some type of decline, or the market might consolidate. Okay, that happens more times than not. So why is that helpful? Because it helps us time the market in addition to just having something like the GITTIS indicator. Look over here, for example. We knew that there was a good chance of a cycle away over here, just like we were projecting it over there. What happened? Halfway through this cycle, the market came down, right in the middle, had a little bounce, and then bombs away. What happened here? Here's a halfway point on this cycle right here. It rose up into this first part of the cycle, came all the way down, went way down here, bounced, and had a little drop into the cycle low. Now, if you can tell, I'm not going to dive too deep in the dynamics of what I'm seeing here, but I can tell that the market's losing steam. I can tell that because the oscillations have gone from really big to small. See how that's happening? They're getting smaller. Just think of these as waves in the ocean. Just follow this green and purple line, this whole moving average. The market's losing, at least temporarily, is losing its bear market momentum. Doesn't mean the bear market's over, but it could be. All right, so we're approaching the middle of this cycle, which is about April 3rd. So it's typical to see prices do this, up and then down into the middle of the cycle. So we're going to wait to see, does this market decline some more down here to maybe to 37.88? We got to wait to see what this does. Okay, but regardless of what happens with this market, there's going to be a big move in the market, very likely, because the GITTIS indicator, the GITTIS logic is telling us that. Okay, so keep an eye on this on the weekly chart. Remember, weekly chart. For you guys and gals that are into intraday only and day trading, get out, take some time, take a breather. Get out from the 1 minute, 5 minute, 15 minute charts and come look at the weekly charts too. It's going to help you keep your direction. Okay, keep an eye on this because this is going to help you decide how to trade and which side do you want to take your risk. Do you want to be favoring short side trades or long side trades during your intraday trading? Because if you get stuck in a trade, well, it's good to be stuck in a trade with the overall trend, right? Okay, so for my opinion about the S&P 500, I'd say there's going to be a big move in the market. I'd wait a little bit to see if this is going to roll over. If it does, then we know we've got some more downside coming. If it just kind of stalls and we get a little bouncy bounce here, okay, then that's a different story, and the move could be higher. But I'd let this play out for another week or two and wait to see what it does. Especially for your swing traders. That's what I tend to do, a lot of swing trading. Okay, so let's switch over to just a couple more symbols. I'm going to show you that I know you're really going to like, that the GITTIS algorithm picked out. Now, this happens on a daily basis for my members, so stick around and I'll talk about the membership here in a little bit. All right, so look down here. This is the GITTIS algorithm saying that picked out this symbol, that this is the 2-year yield futures. Now I'll get into symbols that are not a future for those that don't trade futures. Just hang with me and I'll show you a symbol on something you could have traded. But look at the 2-year yield here, which is a fairly new product, by the way, that the CME group just put out like 8 months ago. So it predicted and forecasted here that on February 14th, there was going to be a big move in this futures product. Okay, so we grabbed a pencil. It predicted it right there. Was there a big move? Oh my goodness, you're talking 2 weeks of nothing but huge profitability. Okay, and we know that if we just drop right here, that we would be leaning long side, right? We'd be favoring the long side trade because the MACD is telling us that. It's already in positive momentum territory above the purple line. Now, for those that are looking at really short-term kind of fast-moving indicators, You might say, I'm not trading long. This thing is peaked out. See, that's why we use all the information. We don't just look at one set of indicators. Because these indicators would have told us, oh my gosh, there's divergence going on, don't trade it. But the MACD says otherwise. Now, I didn't draw the cycles on this one like I did the S&P 500, but I can tell there's cycles here. Here and here and here. Okay, there's some cycles there. There might be some right here and here. Here, there's one right there. Okay, so if I'm not going to spend time doing it right now in the video, but I know for a fact I could pick out probably some pretty predictable cycles here, which would even help further confirm that this long side trade would have been the right way to go, and this would have been huge profitability over about maybe a week and a half worth of trading there, 2 weeks worth of trading. Okay, so that's another symbol that was picked out that the members get every night. This would have showed up on the list of symbols. Okay, let's look at two more. Okay, let's look at the VIX. Okay, here's the VIX right down here. I guess indicators saying something was going to happen with the VIX. Now, what day did that happen on? Okay, let me clear this screen because I'm kind of blocking the date. March 8th. Oh, sorry. Came out on March 9th. Yeah, obviously that was a pretty big day already. But it was telling us there was going to be more move in the market. And sure enough, there was. Look at this. For the next 2 days was huge profitability in the VIX. So you could trade options against the VIX, and there's some ETFs, I think, that track the VIX as well. All right, let's go back and look at this one. What is this one telling us? That day was February 28th. Now that one was telling us to trade it short. So you would trade options to the short side, right here. Or you could trade an ETF that perhaps is inverse to the VIX. All right. Or you could trade the VIX futures. Remember, there's VIX futures. I think they're /VX. And then you put there's some other numbers or letters that come after this for the contract month. But if you're like me, I tend to trade the futures. I would have traded the VIX. I think the VXM is the E-mini VIX. And then there'd be like, H for March, let's say 23 would come after it. That'd be March E-mini VIX futures. I would have traded this probably. So it just goes to show you, look at this, just within a matter of a few weeks, it had 2 times this came up. One to take a short side trade, another one to go long. The last time that happened was way over here, which without even looking at the candlesticks above it, I would know there's probably a little bit of downside left in this. Let's see if it's true. Yeah, it was right there. So there was at least another week to the downside, little bounce and even more downside, but you would have gotten a range of 1.75. I'm looking up here for those that want to know. This is the range right here. Right? We would have gotten this range right here. Let's see, it told us to make a trade there, and the next week had a range of 1.71, sorry. Now, I don't know if you know much about the VIX. That's a big movement, a range of 1.71. That's a whole lot of money in the bank. That's called what we would call a making bank week. The whole week was down. Okay, now let's just look at a regular symbol that's not a futures, and then I'll talk just briefly about the membership if you're interested in. Okay, let's look at an ETF. This is called FAZ. This is the let's see, Direxion, I think is pronounced, shares ETF Trust Daily Final. This is a bear ETF, so it's inverse to the stock market, to the S&P 500. And why am I picking it out? Because they get us indicator again. And matter of fact, this showed up. Let me go over to the symbols list, and I'll show you it real quick. Okay, here's a file that I put out every night for the members. This just happens to be called Big Move List 2. You may not be able to see it, but this is for March 8th. Okay, and in here, you'll notice right there, the FAZ symbol was included. And the Get Us algorithm picked out all these symbols, and here's FAZ. So I'd put this on my watch list probably. I'd go through it real quick. I'd bang through the watch list and see which charts look the most juicy, right? Which ones are the juicy trades? Let's say I picked FAZ. Okay, let's go back to the chart. So now you know what the members are getting every night. They get this. They get a list like this. They also get a list for futures. They get a list for sectors, industries, and sub-industries. Okay. And they get this list. This particular list right here is for symbols that are optionable as well. That doesn't always mean the options are that great, but at least they're optionable. Okay, let's go back to the chart. Let me get back on yellow here. So it said, did it pick it on March 8th right here on the chart? Sure enough, it did, right? March 8th, there it is. Right there, guys. Sorry, this one. This date right there, this little candlestick. This guy. Would that have been a good trade? Let's take a look. Let's draw the line down here. Well, we already see this SMI, if you want to know what that stands for, Stochastic Momentum Index, was already going up, right? This indicator here was going up. You can see right here the MACD was already above the zero line, so it's in positive momentum territory moving upward, and the lines are separated. That's a good sign. So we've got two indicators that are telling us, along with the Giddis indicator, that picked out this symbol that says, hey, this looks like a long side trade is possible. So guess what? On the very next day in the morning, what I would have done on that big old juicy green candlestick in the morning, it opened up down here, right? I would have taken a nibble on this inverse ETF, this bear market ETF. Bear ETF, sorry. And as the day went on, I just would have increased my position. Maybe I take 20 shares in the morning, maybe 30, 40, whatever I could afford. Increase my position. Because I know the chances are high that this is going to go up. So why did I put this one in there? Because for you guys and gals who only have cash accounts and don't have margin accounts, this is something you could trade. You could trade in old school, straight up long side trade, right? You don't have to trade the futures. You don't have to trade options. You don't have, right? So I'm just showing you this. The membership caters to all different types of traders. Cash accounts, margin accounts, small traders, retail traders, big traders, big accounts. Heck, I could even get hedge fund managers, paying for a membership to get this data because they know the data is good. Right? Look at this. This thing was good for what? 3 days. Look at this massive gaps that were happening up here. Huge. All right. Okay. Let me finish off the video with one more thing. Let me switch over to the Discord server, and I'll show you how this all works. All right, so here we are on my Discord server, and you can see right here is the channels. All right, you'll notice right here it says server subscriptions. So if you like what you saw in this video, go on in here to get a server. The link is right in this video. Below the videos in the description, you'll see a link for the Discord server. Just click on it. It's going to. If you don't have a Discord, if you're not registered with Discord, go ahead and register and get an account with Discord, okay? And then you come into my server to get a server using that link, and just click here on server subscriptions, okay? Guys, super cheap, $7, not $700, not $79, $7.99 a month. That is dirt cheap. Okay, so this is where the payments happen right on the server. Okay, you'll notice down here, let's see if I can find it. Let me see if I can scroll down. Okay, take a look at this channel right here. This is the Premium Symbols channel. Remember that text file I showed with all the symbols? This is the channel where all those symbols get dumped into. There's just a link in there. Okay, we can even click on it. Let's click on it. There you go. Okay. On 3/16, I put these symbols in here. I think that was Thursday night. You got a big move list 1, big move list 2. This is the one we were looking at that we picked the FAZ symbol out of, big move list 2. I didn't do it for, in that case, the one we were looking at was back for March 18th, but you can see I'm doing this every day for the members, right? Here's one for futures, and here's ones for industries, just like I was talking about. Okay? All right, so if you like what you saw in this video, like I said, if you're interested in subscribing, there it is. Come to the Discord server, click on server subscriptions, and you can pay for it to $7.99 there. It's a monthly subscription. You can cancel anytime you want. All I ask is that you please read the rules before you subscribe, okay? There's the refund rules are in there, and just the general rules for the server, basically just telling you to be respectful, okay? All right, hope you all enjoyed the video. Talk to you all real soon again next time.